In regards to my particular role, it actually can vary from day to day, but there's actually 4 core ingredients in regards to my specific role. The first one is managing the existing loans. When I say managing existing loans, that relates to monitoring all of our current settled loans at this point of time. We also speak to the clients, we communicate them on a monthly basis just to make sure they're on target and everything coping with everything well. My second daily task in regards to my role is negotiating terms with the actual funders or lenders. I've actually got some very good relationships. I've actually built up with a lot of funders out there, and I've established that trust factor, which is the most important thing at this day of age. When I say negotiating loans, I actually compile the loan application together. I also speak to the actual funder before I actually email across, just to make sure they actually aware in regards to the new deal that's actually come across. And I give them a brief background in regards to what the application actually relates to. My third main task is actually filtering the actual loans. When I say filtering the loans, that actually relates to sorting out if I suspect there's any fraudulent activities. If I suspect there's anything fraudulent or I know that the actual borrower, the loan stops there, it doesn't go nowhere. Because what can actually happen there, it affects our reputation and my reputation with the actual lenders as well, which I cannot break that. The most important thing is also in regards to reporting our trustee and investors. I compile actual monthly and quarterly report to Vasco, our trustee, giving them a breakdown in regards to where our loan portfolio is sitting at that stage. First of all, I'll start off with the actual property investment. Property investment tends to fluctuate across the board, so that's probably the main difference. With the actual mortgage side, in regards to the mortgage investment, it tends to be a bit more stable. With the actual trend itself, I think people are probably just staying a bit more stable at this stage just to see what actually happens. We're quite fortunate the RBA actually reduced the rates, which hopefully will actually kick off the economy a bit more. And like I said prior, the government's also looking in regards to having some tax savings brought across the board there. This will actually increase the actual borrower's cash flow. Once that happens, people tend to spend a bit more and they gain a lot more confidence. Like I said prior, in regards to the mortgage side, tends to be more stable. The investors feel a lot more secure and just in making sure they get a proper return on their funds. I've actually noticed a common theme coming through since I've actually been with the actual company. I've actually seen the same familiar investors coming through us either a monthly or quarterly basis, which is a good obvious sign for us. What that indicates to me is they actually trust us and they value our opinion. With the both types of investment, whether it's property or mortgage, the investment portfolio has actually changed in the last few months. I've noticed that. There seems to be a lot of projects which cannot be financed, and clients then tend to shop around in regards to non-code lenders or non-bank lenders. With the mortgage side, there's been a slight decrease in regards to the house properties. So that's what's actually happened there. But thankfully, in regards to the market seems a bit more stabilised at this point of time, which going forward will help, especially in regards to if there's going to be tax reductions coming through, which then that should be kicking in effect in the next few months. The key risk in land banking is in regards to the actual serviceability. What we have to bear in mind here, this is vacant land whereby it's not generating income. The actual borrowers relate to other income from other sources, other investment properties. The problem there is if there's a delay in regards to some of these properties not being completed on time, it will affect the actual cash flow or the actual client repayment. So that's the most important thing in regards to land banking. The other one in regards to construction loan, there's probably a couple of issues which stand out there. First of all, sometimes I've actually seen clients run out of funds to actually complete the project, whereby they can actually come back to various other lenders to raise some more money, which at times a lot of lenders do want to take on other projects. The second one is the actual pre-sales of the actual properties. If they're sold, if they haven't been sold, or there's some sort of time frame in regards to the pre-sales by the time they actually settled, and that can actually affect in regards to when the actual funds are repaid back to us. The other most important thing in regards to lease stock or lease stock loans, what we have here in regards to the type of the tenant on the actual property itself. Sometimes these rentals can be deflated, or there's been issues in regards to the actual rent coming through, which can affect the client's cash flow.
Thank you.